Time for Hot Picks, and today we're focusing on cannabis stocks. Our guest has Calgary-based High Tide, the big retailer, as a top idea. He says the company has entered the German market and is becoming a distributor of medical cannabis in Europe. Let's get more from Frederico Gomes, Director, Institutional Equity Research in Life Sciences at ATB Capital. Frederico, thanks very much indeed for joining us. Give us your take on High Tide, please. Why do you like the stock?
Well, thanks for having me. So High Tide, they're one of the largest Canadian cannabis retailers. They have a long runway for growth, and the market is consolidating. So High Tide operates about 210 stores today in Canada. They have a long-term target to exceed 300 stores, and they're opening 20 to 30 new stores every year. So they get very attractive growth from that alone. On top of that, they also have very strong same-store sales growth. Last quarter, they reported about 7% growth year over year. So it is a market that is consolidating, as I mentioned, and benefiting them. And then outside of Canada, as you mentioned, they recently entered the German market through an acquisition. So they acquired a distributor of medical cannabis in Europe. And I think they're poised to benefit from growth in those international markets, which have been very, very attractive. So we see High Tide as a growth at a reasonable price story, so a GARP story. The stock's trading at around the 7 times EBITDA and growing top line double digits. With margin expansion, we think that they can grow adjusted EBITDA at very attractive rates.
Tell us about this company, SNDL, because they're involved in both liquor and cannabis retailing.
Yeah, SNDL is a differentiated player in cannabis, so they're very unique in the space. They have this diversified platform with exposure across the cannabis value chain, from cultivation to manufacturing to retail, where they operate, about 180 locations in Canada. They are the only Canadian producer that's actually vertically integrated from cultivation to retail. And like High Tide, they're seeing, very attractive growth in retail in cannabis. They also have a liquor retail platform with around 160 stores in Western Canada, predominantly in Alberta. And so it's a good, mature cash flowing business for them, and they can use the cash flow from that more mature business to keep investing in cannabis. And finally, in addition to those operations, they also have several investments in the U.S., 2 of which are undergoing restructuring, and we expect SNDL to be able to equitize those investments soon.
And then finally, Decibel Cannabis Company, DB.
Yeah, Decibel is a smaller player. It's a small cap, around 80 million. But I really think that it is a name that's flying under the radar here. It's a top 5 Canadian LP, very strong domestic brands. And most importantly, we're expecting very strong growth the second half of this year and going into 2026 because of international exports. So in late last year, Decibel made an acquisition. They acquired Agmedica, which is a company that operated an EU GMP certified facility. So that's a certification that you need to export to European markets. And so Decibel acquired that facility, and now they have been ramping up. So we expect very strong growth in the second half. Stock trades at 4 times EBITDA, double digits free cash flow yield. So we think it's a very attractive name here.
And sorry, so they're involved in indoor cultivation?
Decibel has indoor cultivation, and they're also, through that EU GMP facility, they can export to international markets.
Right. And apparently they've got more than 2,600 stores stocking their brands in several provinces. And wow, at the retail level, sales of $300 million. Broadly, Frederico, what's the latest in the cannabis investing space? I mean, are investors still uncomfortable with a lack of sustainable profits?
Well, I think the environment in Canadian cannabis has really improved over the past 6 months. So investors have become more bullish on the space. We see that in the stock reaction as well. And that's a function of 2 things. So first one is we're seeing very strong growth in international markets, especially in Germany, where exports are booming. Canadian weed is very valuable in Germany. Over 50% of the the imports to Germany are coming from Canada, and so the Canadian players are benefiting from that. And then, the domestic environment has actually improved. You see a more balanced demand supply, and so prices have improved. And with that, these companies have been reporting much better results in terms of cash flow generation and profitability.
Frederico, thank you very much indeed.
Thank you.
Frederico Gomes, Director of Institutional Equity Research in Life Sciences at ATB Capital.